Market volatility is on the rise, with the VIX at 18.4, as investors await key PCE inflation data. Tech, healthcare, and finance sectors are making big moves. Stay with me, your complete market intelligence briefing starts right now. This week, the overall market tone remains cautious, with the S&P 500 down 0.06% week over week, the NASDAQ down 0.19%, and the Dow down 0.36%. The VIX is signaling a relatively stable market, up 0.27% to 18.43, indicating a moderate level of risk appetite. The 10-year yield is up 4.2% week over week to 4.59, and the US dollar index is up 0.8% to 99.27. Commodity prices are on the rise, with oil up 6.9% to 148.23, which is benefiting the energy sector, up 6.71%. The energy sector is one of the top performers, along with commodities and forex. On the other hand, materials, real estate, and consumer sectors are lagging. The one theme that overarches this entire week is inflation, with the upcoming PCE inflation data release on May 29, which is the Fed's preferred inflation measure. This economic release could shift sentiment and impact the market's expectations for future rate hikes. As we analyze the market, it's essential to remember that this is educational content and not financial advice. The market regime is currently under normal conditions, with the VIX at 18.4, indicating a moderate level of risk. Asset classes to watch include energy, commodities, and forex, which are currently outperforming. Now let us go sector by sector and break down exactly where the opportunities and risks lie. Technology sector performance was somewhat muted this week, with the QQQ down 0.32%, although the month-to-date gain remains impressive at 10.69%. The Relative Strength Index, or RSI, is at 75, indicating a neutral trend but an overbought signal. Key stocks in this sector, such as AAPL, MSFT, NVDA, GOGL, and Meta, were influenced by the overall market sentiment. The upcoming PCE inflation data release is a key risk or catalyst this week, as it may impact the sector's trajectory. The RSI reading suggests that the sector may be due for a pullback, and investors should be cautious. Please remember that this is educational content and not financial advice. From a strategic positioning perspective, investors may want to consider a more defensive approach within the technology sector, given the current market conditions and the potential for volatility. Healthcare sector performance has been notable this week, up 1.12%, despite a modest decline of 1.03% for the month, with key names such as J&J, UNH, PFE, BBV, and Merck driving the trend. The sector's bullish trend and signal are supported by general market conditions, which remain under normal conditions. The Relative Strength Index, or RSI, at 47, suggests the sector is neither overbought nor oversold, providing a neutral technical reading. This week, investors should watch for potential catalysts in the form of earnings reports or clinical trial updates, which could sway the sector's momentum. As a strategic consideration, investors may want to position themselves in a way that balances sector rotation and long-term growth prospects, keeping in mind that this is educational content and not financial advice. Financial sector performance has been relatively muted this week, with the sector ETF declining by a fraction, at 0.27% and about 1.79% for the month, which signals a neutral trend. The key drivers of this performance have been the ongoing concerns about interest rates and the upcoming PCE inflation data, which will likely influence the sector's trajectory. Names such as JP Morgan, BASF, and GS are worth watching, given their sensitivity to these economic indicators. From a technical standpoint, the Relative Strength Index, or RSI, is at 42, which suggests that the sector is not overbought or oversold, further reinforcing the neutral signal. As investors navigate this environment, it is essential to maintain a balanced approach, considering the potential risks and opportunities, and remember that this analysis is for educational purposes only and not a substitute for financial advice. Energy, a key sector in the market, has shown notable strength this week, with the sector ETF gaining 6.71% and 5.05% for the month, indicating a bullish trend. The sector's performance was driven by a combination of factors, including favorable market conditions. Key names such as XOM, CVX, and COP are worth watching, given their significant influence on the sector. A key risk or catalyst this week is the general market conditions, which can impact the sector's momentum. From a technical perspective, the RSI reading of 59 suggests the sector is not overbought, supporting the bullish signal. Strategically, investors may consider positioning themselves to capitalize on the sector's potential upside, keeping in mind this is educational content and not financial advice. Consumer sector performance has been under pressure this week, with the XLY ETF declining by 3.05%, bringing the monthly loss to 0.94%, as the sector's trend has turned bearish. The decline in key stocks such as Amazon and Tesla has contributed to the sector's weakness. The PCE inflation data release is a key risk or catalyst this week, as it may impact consumer spending patterns. From a technical perspective, the RSI reading of 47 suggests that the sector is approaching oversold territory. Watching how the sector reacts to the inflation data will be crucial, as it may influence the performance of stocks like HD, MCD, and Nike. This is educational content and not financial advice. It is essential to maintain a strategic positioning that takes into account the current market conditions and sector trends. Industrial sector performance was lackluster this week, declining by 1.04%, despite a modest gain of 0.63% for the month. The Relative Strength Index, or RSI, is at 51, indicating a bearish trend and a bearish signal. Key names such as Caterpillar, Honeywell, UPS, Boeing, and General Electric are worth watching, given their influence on the sector. This week's decline was largely driven by general market conditions, which weighed on the sector. The RSI reading suggests the sector may be due for a further pullback. From a strategic positioning perspective, investors may want to exercise caution, given the bearish trend in signal, and consider a more defensive stance within the sector. Please remember, this is educational content and not financial advice, and investors should consult their own advisors before making any investment decisions. Materials performance was lackluster this week, down 2.5%, with the sector ETF XLB also declining 2.8% this month, pointing to a bearish trend. The weakness can be attributed to general market conditions, which have been weighing on the sector. Key names such as LAN, SHW, and FCX have been under pressure, with their stock prices reflecting the sector's bearish signal. The Relative Strength Index, or RSI, is at 42, indicating a potential oversold condition, which may lead to a rebound in the near term. With normal market conditions prevailing, the key risk this week will be the overall market sentiment, which can impact the sector's performance. In terms of strategic positioning, investors should consider a cautious approach, as the sector's fundamentals and technicals are currently aligned with a bearish outlook. Please keep in mind this is educational content and not financial advice. Utilities sector performance has been under pressure, with the sector ETF declining by 1.9% this week and 5.35% this month, indicating a bearish trend. The Relative Strength Index, or RSI, is at 36, which is a bearish signal. Key names in this sector, such as NE, DUK, SO, D, and EXC, are worth watching as they have been impacted by general market conditions. The decline in the sector is likely driven by the current market environment, and a key risk this week is the potential for further downward momentum. From a technical perspective, the low RSI reading suggests the sector may be due for a bounce. However, the overall trend remains bearish. As a strategic positioning comment, investors may want to consider a defensive approach. This is educational content and not financial advice. Real estate sector performance has been lackluster this week, with the sector ETF, VNQ, down 2.8% and 1.31% for the month, indicating a bearish trend. The Relative Strength Index, or RSI, is at 46, which is a bearish signal. This decline can be attributed to concerns over rising interest rates and their impact on the commercial real estate market. Names such as PLD, AMT, and EQAX are worth watching, given their significant exposure to the commercial real estate space. The key risk or catalyst this week is the PCE inflation data, which may influence the Federal Reserve's decision on interest rates. With the RSI at 46, there is room for further decline. As a strategic positioning comment, investors may want to exercise caution in this sector, given the current bearish trend, and this is for educational purposes only, not financial advice. Crypto sector performance has been lackluster this week, with the sector ETF, IBIT, down 1.39%, despite being up 4.89% this month. The decline can be attributed to general market conditions, which have had a ripple effect on the entire sector. Names worth watching include BTC, ETH, and SOL, as they are likely to be impacted by any changes in market sentiment. The key risk this week is a potential downturn in market conditions, which could further dampen investor enthusiasm for the sector. From a technical perspective, the RSI reading of 56 suggests that the sector is not yet in overbought territory, but the bearish trend is a cause for concern. As such, investors should exercise caution and consider a defensive positioning strategy, keeping in mind that this is educational content and not financial advice. Commodities have shown a notable uptrend this week, with the sector ETF gaining 4.21%, bringing the monthly increase to 8.44%, indicating a bullish trend. The key drivers of this performance have been the precious metals, particularly gold and silver, as well as a rebound in oil prices. Names such as GLD and SLV are worth watching, given their significant influence on the sector's overall performance. A key risk or catalyst this week is the general market conditions, which can impact investor appetite for commodities. With an RSI reading of 62, the sector is approaching overbought territory, suggesting a potential pause in the near term. Strategically, investors should consider positioning themselves to capitalize on potential pullbacks, keeping in mind this is educational content and not financial advice. Forex sector performance was notable this week, with the sector ETF rising by 1.57%, bringing its monthly gain to 1.46%, indicating a bullish trend. The key drivers of this performance were the movements in major currency pairs such as the DXY, Euro to US dollar, Pound sterling to US dollar to Japanese yen, and Australian dollar to US dollar. Names like these are worth watching as they continue to be influenced by general market conditions. The key risk or catalyst this week will be how these currencies react to broader market sentiment. With an RSI reading of 62, the sector is showing a bullish signal, suggesting further upside potential. From a strategic positioning standpoint, investors may consider maintaining a cautious yet optimistic outlook, recognizing that this is educational content and not financial advice, as they navigate the Forex sector's current dynamics. This week is crucial for market participants as we await the release of the Personal Consumption Expenditures, or PCE Inflation Data, on May 29. This data point is significant because it is the Federal Reserve's preferred measure of inflation, and it directly influences the rate path decisions at the next Federal Open Market Committee meeting. The PCE measures the change in prices of goods and services consumed by households, providing a comprehensive view of inflationary pressures in the economy. Market consensus expects the PCE inflation to come in around 2.4% year-over-year, slightly above the Federal Reserve's target of 2%. If the actual number beats consensus, it could lead to a rise in bond yields, a strengthening of the dollar, and a potential sell-off in equities, particularly in the growth-oriented sectors. On the other hand, a miss could lead to a rally in equities, a decline in bond yields, and a weakening of the dollar. Sectors such as consumer staples, healthcare, and utilities are likely to be less affected, while sectors like technology and consumer discretionary could be more exposed to the implications of this data release. Historically, the PCE inflation data release has been associated with increased volatility in the markets, with the S&P 500 experiencing an average move of around 0.8% on the day of the release. This volatility pattern suggests that market participants are closely watching this data point and are prepared to adjust their positions accordingly. It is essential for investors to keep in mind that this is educational content and not financial advice, and they should consider their own risk tolerance and investment objectives before making any investment decisions. Overall, the PCE inflation data release has significant implications for the market, and investors should be prepared for potential market movements in response to the data. Thanks for watching. Please like and subscribe to Financial Market Oracle. Share your focus for the week in comments. Remember, this is educational content, not financial advice. I wish you a profitable and disciplined week. I will see you next week. Stay profitable. This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.